Bitcoin's dominance in the global financial landscape continues to evolve, and recently, yet another influential figure has revealed their massive investment in the cryptocurrency. Following the footsteps of notable Bitcoin advocates like Saylor and Larry Fink, another powerful financial leader has stepped forward, further solidifying Bitcoin's status as a major asset class. This shift in sentiment towards Bitcoin has been driven by a combination of strategic investments, regulatory developments, and a growing understanding of its potential as a store of value. In this comprehensive exploration, we will delve into various Bitcoin investment strategies, the success stories of early adopters, and the increasingly institutionalized role of Bitcoin in global finance. As Bitcoin continues to grow in popularity, various strategies for investing in the cryptocurrency have emerged, catering to different levels of risk tolerance and conviction. At one end of the spectrum, there's the Normie strategy, which follows a traditional diversified portfolio approach. This is where investors allocate a small percentage of their portfolio to Bitcoin while maintaining exposure to other assets such as stocks, bonds, and real estate. This approach is seen as conservative and aims to balance the potential gains of Bitcoin with the stability of more traditional investments. Moving up the risk ladder is the 10% strategy, where investors allocate 10% of their assets into Bitcoin. This method acknowledges Bitcoin's potential for significant appreciation while still maintaining a diversified portfolio. Many financial advisors recommend this approach for those who believe in Bitcoin's long-term value, but want to limit their exposure to its inherent volatility. For more aggressive investors, there's the maximalist strategy, where up to 80% of assets are allocated to Bitcoin. These investors, often referred to as Bitcoin maximalists, believe that Bitcoin will outperform all other asset classes in the long run, and are willing to take on higher risks for the possibility of extraordinary returns. They may also allocate up to 80% of their income to purchase additional Bitcoin, reinforcing their belief in the cryptocurrency's future dominance. Then comes the double maximalist approach, where individuals not only invest a significant portion of their assets in Bitcoin, but also take out loans, such as a $250,000 mortgage on their house, to acquire even more Bitcoin. This high-leverage strategy amplifies both potential gains and risks, as it relies on the assumption that Bitcoin's value will continue to rise substantially over time. At the extreme end of the spectrum is the triple maximalist strategy, where individuals essentially finance their entire life around Bitcoin. In this scenario, an investor might refinance their home, convert all their assets into Bitcoin, and move to a low-tax jurisdiction such as Singapore or the United Arab Emirates to avoid paying capital gains taxes. They might even invest an additional $50,000 into Bitcoin, believing that the cryptocurrency will skyrocket to unprecedented levels. While this approach can lead to massive gains, as evidenced by projections that a triple maximalist could amass $214 million, it also carries extreme risk. Saylor, the CEO of MicroStrategy, has become one of the most vocal proponents of Bitcoin, and his company's aggressive investment strategy has paid off in a monumental way. In August 2020, MicroStrategy made its first major Bitcoin purchase, acquiring $8.3 billion worth of Bitcoin over a series of transactions. Since then, the value of Bitcoin has increased by an average of 44% per year, compared to the S&P 500's 12% annual gain over the same period. Saylor's decision to leverage MicroStrategy's balance sheet to buy Bitcoin was initially met with skepticism. However, in hindsight, it has proven to be a brilliant move. By combining Bitcoin's appreciation with strategic use of debt, MicroStrategy's stock price has surged by an astounding 825%, making it one of the best performing stocks in the S&P 500. In fact, as of the latest figures, only Nvidia has outperformed MicroStrategy with an 821% increase. Saylor's bold strategy has not only made MicroStrategy a leader in corporate Bitcoin investment, but has also inspired other companies and investors to follow suit. Saylor's belief in Bitcoin is simple: it's either going to zero or it's going to $1 million. His approach to Bitcoin is all in, and he has laid out a playbook for other corporations interested in following his lead. He has articulated various strategies, ranging from conservative investments to highly leveraged plays, showing how Bitcoin can be integrated into both personal and corporate financial strategies. Larry Fink, the CEO of BlackRock, one of the largest asset management firms in the world, has undergone a remarkable transformation in his views on Bitcoin. Once a skeptic who famously claimed that none of BlackRock's clients were interested in cryptocurrency, Fink has since embraced Bitcoin as a legitimate financial asset. This shift in sentiment is particularly noteworthy given BlackRock's size and influence in the global financial markets. In recent years, BlackRock has become one of the largest holders of Bitcoin, primarily through its popular Bitcoin ETF. The launch of this ETF marked a turning point in institutional adoption of Bitcoin, as it provided a regulated and familiar financial product through which investors could gain exposure to the cryptocurrency. Fink now views Bitcoin as an important part of the future of finance, particularly in the context of tokenization, where assets are represented digitally on blockchain networks. Fink has also expressed interest in creating an Ethereum ETF, signaling that his belief in the future of cryptocurrency extends beyond Bitcoin. BlackRock's involvement in the crypto space is significant because it validates Bitcoin's legitimacy in the eyes of institutional investors. With BlackRock's endorsement, Bitcoin is no longer seen as a speculative or fringe asset, but as a serious investment with long-term potential. Jan van Eck, CEO of the asset management firm Van Eck, is another prominent financial leader who has made a substantial personal investment in Bitcoin. In a recent disclosure, Van Eck revealed that over 30% of his personal wealth is allocated to Bitcoin, a significant percentage that underscores his confidence in the cryptocurrency's long-term potential. Van Eck's company has been deeply involved in researching Bitcoin and other digital assets, and their analysis has led them to some bold conclusions. One such conclusion is the possibility that Bitcoin could reach a price of $3 million per coin if it is widely adopted as a global reserve asset. While this projection is speculative and relies on extreme levels of adoption, it illustrates the potential upside that Van Eck and other professional investors see in Bitcoin. In more conservative scenarios, Van Eck predicts that Bitcoin could achieve half the total market capitalization of gold, which would translate to a price of around $350,000 per coin. This projection is based on the idea that Bitcoin will continue to mature and become a more widely accepted store of value, similar to gold. Van Eck's personal investment in Bitcoin, combined with his company's bullish research, highlights the growing belief among financial professionals that Bitcoin is here to stay. The introduction of Bitcoin ETFs has been a major milestone in the institutionalization of Bitcoin, but the adoption process is still in its early stages. While the initial launch of Bitcoin ETFs broke records, attracting billions of dollars in investment, many large institutional investors are still unable to access these products. This is due to limited approval from major financial institutions like Morgan Stanley, and the fact that other wirehouses, such as UBS and Wells Fargo, have yet to fully embrace Bitcoin ETFs. According to Matt Hogan, CIO of Bitwise, Bitcoin ETFs are a multi-year story, much like the adoption of gold ETFs. When the first gold ETF was launched, it also experienced record-breaking growth in its first year, but the real adoption occurred over the next several years. Hogan predicts that the same will happen with Bitcoin ETFs, with each subsequent year bringing in more investment than the last. This slow but steady adoption process is typical of new financial products, especially those involving relatively new asset classes like cryptocurrency. The potential for Bitcoin ETFs to attract institutional capital is enormous. As more financial institutions approve Bitcoin ETFs and more investors become comfortable with the idea of holding Bitcoin in a regulated financial product, the market for Bitcoin ETFs is expected to grow significantly. This trend will likely accelerate as Bitcoin becomes more integrated into traditional financial systems. One of the most unexpected developments in the global Bitcoin market has been the emergence of Bhutan as a major player. Known more for its emphasis on happiness and sustainability than for its financial prowess, the small Himalayan kingdom has quietly amassed a significant Bitcoin stockpile. With holdings worth approximately $780 million, Bhutan is now the fourth largest government holder of Bitcoin, behind only the United States, China, and the United Kingdom. What makes Bhutan's Bitcoin strategy particularly interesting is that it has focused on mining rather than purchasing Bitcoin directly. Bhutan has leveraged its abundant hydropower resources to become one of the world's most eco-friendly Bitcoin miners. This approach aligns with the country's broader commitment to sustainability and has allowed Bhutan to build a significant Bitcoin reserve without the environmental concerns that often accompany cryptocurrency mining. Bhutan's decision to invest in Bitcoin is a bold move for a country with a GDP of just under $3 billion. By diversifying its revenue streams and embracing Bitcoin as part of its financial strategy, Bhutan is positioning itself as a forward-thinking player in the global cryptocurrency market. The global adoption of Bitcoin is accelerating, driven by a combination of individual investors, corporations, and even nation-states recognizing its potential as a store of value and financial asset. From corporate leaders like Saylor and Larry Fink to unexpected players like Bhutan, Bitcoin is increasingly being seen as a legitimate part of the global financial system. The rise of Bitcoin ETFs, the growing involvement of institutional investors, and the bold projections of financial leaders like Jan van Eck suggest that Bitcoin's best days may still be ahead. As Bitcoin continues to gain mainstream acceptance, its future will likely be shaped by ongoing technological advancements, regulatory developments, and the evolving views of major financial institutions. For those who believe in Bitcoin's long-term potential, the opportunity to invest is still in its early stages. Whether through conservative strategies like the 10% allocation or more aggressive approaches like the Triple Maximalist strategy, the case for Bitcoin as a cornerstone of a diversified financial portfolio is stronger than ever.